Unemployment in Ireland is falling faster than almost anywhere else in the European Union. So what does the Irish economy want and indeed need from the bloc's central bank? Alan McQuaid joins me down the line to discuss. Alan, now earlier this year saw Ireland opt to go it alone in their bid to get back to the market. But with statistics showing investment in Ireland is still persistently low and the lowest in the EU, how would you describe sentiment towards the country at present?
Well, I think if you look at it from US multinationals, they're still investing big time in Ireland. And if you look at it from the bond market perspective, Ireland's 10-year yields are lower than any of the other so-called peripheral countries. So in that sense, I think you could argue the sentiment towards the country is very, very positive. I think the economy is clearly improving. And I think it'll probably outperform most of the other Eurozone countries this year. So that in turn, I think, should be then reflected in greater investment overall as the year goes on and into next year.
After a weather-affected sluggish start to 2014, the indicators now are that major developed economies are in the main finding their feet once again. According to some economists, Ireland is better placed than most to take advantage of that, though remaining competitive is vital. Do you concur?
Yeah, I do. I think if you look at the makeup of Ireland's GDP, exports account for actually greater than GDP. It's 108%. So we're a very, very open economy. So clearly, what goes on in the rest of the world it plays a big factor in how things play out for us. I think the risk is though that if you go back to the last boom we had, I think Irish companies start to price themselves out of the market by raising wages just needlessly, and that's a risk I think going forward, that as the economy recovers, that the pressure comes on to hike wages, and the last thing you want is to hike wages too much.
Various ECB figures have over the past month stressed their determination not to be complacent about the risks of a protracted period of low inflation. Faced with this week's wave of negative data and having used most of the conventional policy levers, will today's meeting signal a move by the bank into the realm of the unknown? And how could this affect Ireland's recovery?
I don't personally expect to see anything in terms of QE today, but there's every chance we along with interest rate cuts, we may get some sort of program similar to the funding for lending scheme in the UK to promote lending to businesses. And if that's the case, that would clearly be positive for Ireland and the SME sector here, as too would lower interest rates. So I think it can only be good news. I think the ECB recognises the fact that the Eurozone economy needs further stimulus to combat sort of still sluggish growth and the threat of deflation. So, and I think that, as I say, can only be good news for an economy like ourselves.
Indeed, it has been a difficult week for the bloc, with a plethora of data doing little to direct the ECB's policy path. But actually the real problem for the continent is perhaps a credit problem. The market was moderately short on the euro going into the meeting, but what is your outlook for the single currency in the aftermath?
Well, I still think that overall I would be looking to sell the euro, and I think it'll weaken as we head into the second half of 2014. I think a combination of factors. I think further stimulus from the ECB will probably be needed, plus the fact that I think both the US and UK look like they're going to be raising rates at some point over the next 12 months, and that can will probably strengthen their currencies against the euro. I think as well, if the ECB were to go down the route of quantitative easing, similar to what the other banks have done, well, I think the one thing we have seen when the likes of the US, UK and Japan have gone down that route is that their currencies have weakened dramatically, and you would hope that the same result would materialise for the euro, and for a country like Ireland, which I said at the outset is highly dependent on its exports. A weaker euro would be very beneficial indeed.
Alan, great to speak to you. Thank you for your time. Well, that's all from Alan and myself for the moment, but Kiri Bloor will be back with all the reaction from the ECB's rate decision and press conference. So make sure you keep clicking back. Goodbye for now.